Japan's economic landscape is heating up, and the latest data might just fuel a fiery debate. Strong industrial output and rising inflation have the country's policymakers considering a significant move. But here's the twist: Tokyo's CPI inflation exceeded expectations in October, surging 2.8% year-on-year, outpacing September's 2.5% and defying market predictions of 2.4%. This surge is particularly intriguing as October is the month when companies traditionally adjust prices. A 0.6% monthly increase, adjusted for seasonal variations, indicates businesses are passing on higher input costs to consumers. Both goods and services prices climbed, with labor-intensive sectors such as transport, communication, and entertainment leading the charge. The Bank of Japan attributes this to sustainable wage growth, a key factor in the inflation narrative. Food prices, though rising, did so at a more modest pace. Utilities prices, however, soared as government subsidies expired. Our forecast: core CPI will hover around 2.5% by year-end, underpinned by robust wage growth. The government's strategy to combat inflation includes a gasoline tax reduction and temporary discounts on winter utility bills, which may temporarily ease headline inflation in early 2024. And here's where it gets controversial: industrial output rebounded in September, growing 2.2% month-over-month, seasonally adjusted, after 3 months of stagnation. This recovery was somewhat dampened by a 0.1% quarterly decline in the third quarter, attributed to U.S. tariff-related output cuts. The transportation equipment and iron/steel sectors felt the brunt of these tariffs. Yet, the recent relaxation of tariffs in various countries could bolster Japan's industrial production in the coming months. The semiconductor market remains optimistic, with equipment sales increasing for the second month, reflecting persistent global demand. Retail sales, however, present a mixed picture. While they rebounded in September, the 0.3% month-over-month increase fell short of the market's 0.8% expectation. This, coupled with a decline in both industrial production and retail sales in Q3, hints at a GDP contraction for that quarter. Nevertheless, September's rebound hints at a potential economic turnaround in the current quarter. The Bank of Japan's decision to pause rate hikes, citing trade uncertainties, is intriguing given today's data, which hints at an economic revival that could justify future rate increases. And this is the part most people miss: today's data strengthens the argument for a December rate hike, a move that could significantly impact Japan's economic trajectory. So, what's your take? Is a December rate hike the right move for Japan's economy? Share your thoughts in the comments, and let's spark a thoughtful discussion on this pivotal moment in Japan's economic journey.